With all this tariff talk and the negotiations going on, the uncertainty in the market, and where the market's at right now, there's a huge opportunity that we're going to cover in this video in 3 stocks that are here for the long term and poised to grow. I'm talking about 2x, 3x your returns in maybe 6 months to a year. No guarantees. Do your own research. However, these guys are here to stay and they're on sale. So in this video, go ahead and hit the like and subscribe buttons down below. Also, be sure and download that free options workshop in the link below. It talks about the main benefits of trading options over buying stocks. And then we'll jump into the live trades as well as why these 3 stocks are poised for growth going forward. And they're not all in the tech sector. Oh, and you're probably wondering, how are you going to get 2x, 3x your return on your money, Darren, in 6 months to a year? Well, we're utilizing an option trading strategy called Leaps Options. And on top of that, we're not only going to profit on the huge upswing in the prices over the next few months, but we're going to collect monthly premium against those Leaps options without any additional capital outlay. So why is now the perfect time for this option trading strategy? Well, the fear and greed index is at 8 right now. And remember what Warren Buffett said, when others are greedy, we want to be hungry. I think something like that. I'm not sure. I'm going to check that. We want to trade companies that are operationally flexible. For instance, Novo Nordisk has invested heavily in expanding production capacity for its high-demand drugs, ensuring it can meet growing healthcare needs even during supply chain challenges. Novo Nordisk focus on chronic disease treatments like diabetes and obesity have made it a cornerstone of the pharmaceutical industry. Its $4.1 billion investment in U.S. manufacturing highlights its commitment to meeting rising demand while maintaining growth stability. We also want to invest in companies that have diversified or multiple income streams. AMD's focus on both consumer electronics and data center solutions has positioned it as a leader in the semiconductor industry. And remember, semiconductors are excluded from the tariffs. It is allowing itself to thrive despite global chip shortages. Their focus on technology and innovation in semiconductors has allowed them to capitalize on the growing demand for advanced computing solutions in AI, as well as gaming and cloud services, making it a resilient player in the tech sector. And companies that are aligned with the needs of this changing world are going to do well going forward as well. Palantir Technologies exemplifies this by providing essential data analytics solutions for government and enterprise clients, ensuring steady demand regardless of the geopolitical or market instability. Palantir's robust government contracts and enterprise solutions ensure consistent revenue even during periods of economic uncertainty or geopolitical tensions. So why are Leaps and poor man's covered calls ideal for this market with so much uncertainty and these great stocks being down so much? Well, a few different reasons. Leverage with lower capital risk. Leaps allow investors to control a larger position in these companies for a fraction of the cost of buying the shares outright. For example, buying deep in the money Leaps calls on AMD or Novo Nordisk provides exposure to long-term growth while minimizing upfront capital. This leverage amplifies returns if the stock rises, making it ideal for undervalued companies poised for recovery. Income generation through the poor man's covered call. By selling the short-term out-of-the-money calls against the Leaps positions, investors generate recurring premium income. This reduces the effective cost of the Leaps contract over time and creates a safety net against volatility. For instance, selling monthly calls on Palantir Leaps can offset cost while maintaining exposure to the long-term potential. And on big down days and swings, you can go ahead and close out the short calls and wait for an up day and then throw them on again. That'll even multiply your profits more. Thirdly, reduced time decay and flexibility. Leaps experience slower time decay or theta decay time value compared to short-term options, preserving their value over years rather than weeks. This aligns perfectly with holding resilient companies through market cycles. Poor man's covered calls further enhance the flexibility by allowing adjustments to the strike prices and expiration as the market conditions shift. And then lastly, risk mitigation. Unlike outright stock ownership, leaps limit downside risk to the premium paid. Combined with poor man's covered calls, which lower the break-even price through the premium collection, investors gain a buffer against short-term dips while maintaining upside potential. All right, guys, time to jump into the live trades. All right, guys, we're utilizing the Tastytrade option trading platform. There's a link down below. There's benefits if you go through my link. It's a great option trading platform, as you'll see. Now, the first company that we're going to look at is Novo Nordisk, and you can see their income statement. This is a pharmaceutical company. You look right here, and you can see what they do. They're engaged in diabetes care. They are doing very well. If we look at their financials, you can see the income statement with the revenue and net income rising year over year and the balance sheet. So in this environment, you want companies with strong balance sheets and income statements. That's what Novo Nordisk is. And if we go and we take a look at the Yahoo Finance, you can see the 5-year chart here. It's way down. I like to see lots of room with it being up higher during times like this. And it was up at 143. The target that analyst has is 109, so much higher. And then if we look at the stats, you can see the PE is 19 right now, but it's traded up in the 40s traditionally. And then you can see the huge profit margins, 34%, and return on equity as well. And then if we look at the analyst predictions or recommendations, a lot of them have strong buy and buy for this stock. So let's go back to the platform and go to the trade page on the platform. And then I'm going to go out a year when we're buying leaps. So out here, we're going to go to the 281 days, so a little bit less, out to January of this year. And I'm going to go deep in the money. So calls are on the left, puts are on the right. Let's go. I like to go at least the 65 delta or deeper. But here's the 68 for $14.35. We click on the buy or the ask to buy that leaps option. Now this is $14.35, which controls 100. Each option contract controls 100 shares of stock. So you multiply that times 100. That's really $1,440 that you're paying for this option contract. We'll go to the mid price. We never pay full price. $14.10. And you can see the price right now is $61 for Novo Nordisk. So 61 times 100 shares is $6,110 versus $1,410. So you're paying less than 20% of the same price to control 100 shares of stock. So that's what I love about leaps options. And am I going to keep it a year? Probably not. And the time decay, as we talked about, it doesn't really affect it largely or big until we get closer to expiration. So we can go to the curve mode right here and analysis. And this is what I love about Tastytrade. And you can see the graph visually. I'm a visual person. I like to look at the graph. But once we get up above 70, and the amount that we pay for the leaps contract, which is also, by the way, the max loss if it were to tank down, which I don't believe it's going to. But as the stock price moves up, we make money just like owning the 100 shares of stock. So in order to cover our 1410, if you look here, you can look, if we get up to around the $83 range, which is very doable, then we're already doubling our money on this. So that's what I like about leaps. And what we're going to do now is sell a call against it to bring down our cost even further with the poor man's covered call. So $14.10, and then we're going to go back to the table mode. We're going to close that up, and then we're going to go out 30 to 45 days. I'm going to go to the May 16th, and I am going to sell the 70 call against it for $1.40. This is the 26 delta, so it still gives me a 74% chance of staying and keeping this whole complete $140 within the next 36 days to 36 days to expiration. So we're going to click on the sell, the bid right here. That brings our cost down to $12.61. We hit review and send and place the trade. All right, I'm going to run a little quicker through these last two, but AMD, we're doing a similar trade in AMD. This is trading at $90 right now, and you can see the 1 year target on Yahoo Finance is 144, and you can see it was up here at over at 200. That's actually my target. I mean, eventually it's going to get back there, but it's a huge opportunity right now. If you look at the analyst ratings for it, it beat earnings the last 3 times. A lot of buys and holds on AMD. So we go to the Tasty Trade platform. You can see the income statement, fantastic. Balance sheet, fantastic. And we'll go to the trade page. We're going to go out a year. So we'll go out to the March 344. We will buy the deep in the money. Looks like 80 is a good price right here at the 69 delta. We click on the buy, and it's $24.60 is the mid price. Now, versus $89.86. So to control 100 shares, if we bought the stock, it's $9,000 basically, versus we're paying $2,400. And we also close this up. We're going to sell that short call against it in May again, and we can go all the way up to the 100 and collect $365. So think about it. If we collect $365 every month for 10 months, that's $3,650. So in less than a year, we're covering the cost of this whole trade, and we control 100 shares for free. So in reality, what I've found most of the time, it happens in about 6 months. So this is a great way to really, double your profits as a stock moves up in price. But we sell the 365, and again, we've got the upside on the leaps all the way up to 100. And if it stays below that, then we keep the entire 365 on the short call option going forward. So we hit review and send and place the trade. All right, the last one of my favorites, Palantir Technologies, ticker symbol PLTR. And you can see this one still, it's held up pretty well already. It's at 89 right now. And the high was up here at 120. It's going to get back there. And it's going to continue to grow. I would never short. Well, actually, we are shorting with the leaps and then selling the call against it. But still, it's a long-term play. But Palantir is volatile as well, but super solid company going forward. You can see on Yahoo Finance, they have the 1 year target at 86. I'm thinking, no, it's going to be 120, 150. It's just going to keep going. They're at the start and super solid going forward. If we look at the statistics, you can see the PE is high, and that's the reason. But they've got huge growth and in different sectors as well. So Palantir is definitely one of the hot stocks right now. The analyst, you can see it's beat earnings the last 3 times. Actually, because of the high price, some of the analysts have it a little bit lower, but I don't. If we look at the income statement, super strong. Balance sheet, strong as well. Let's go to the trade page. And we're going to go out 344 days, and I will look to buy the 80 call at $29.80, middle price $29.30. And then we can go ahead and let's look at the curve mode. You can see, again, as that goes up, if it gets up to that 120 price that it was just at, we make $1,010. So almost a third of that. But what we're going to do in the meantime is we're going to sell, go to the table mode. We close up the leaps, and then we go out to the May 16th. And look at the premium that you can collect against this. $89. So it can move up 10%, and we can click $6.40. $6.40 would pay off that $22.80 that we're going to pay for this in how many months? Less than 6 months. 600 times 5 is $3,000. So in 4 months, we can pay off and own the 100 shares of Palantir for no cost. I don't know. Correct me down below in the comments if my math is wrong. Check me on that. But to me, this is a no-brainer trade. I'm hitting review and send and placing the trade. Let me know in the comments below your thoughts on these 3 trades. Let me know what you're doing. If you have any questions, put them in the comments below as well. I answer everyone. Remember to hit like and subscribe. Download the free options workshop. Thanks for watching. I'll see you in the next video.